We need a better tune than that to start the day. That's boring. That's a bit better. Now we can rock and roll. Let's make some money. As soon as we've got this stream up and running, to add to our portfolio and make some coin. Bit of light while we're about it. Good morning. Or afternoon, wherever you are. Evening would be. Morning, Captain. The invite, Lindsay, you're always welcome. It's an open invitation. There's the 8 o'clock scrum, just in time. So the 8 o'clock scrum, I call it the 8 o'clock scrum. It's effectively it's the market makers at 8 o'clock every market time every day. They clear the decks. It's algorithmic trades of trades that have been waiting, that have been placed but have been waiting overnight, and they just the market makers clear the decks of those trades. So you get a spike in activity across most tickers, and it's not real price action, but it just shows on a lot of charts. It doesn't show on all charts, but it shows on a lot of charts. Where have I been? I took a vacation over Christmas, a well-earned vacation. I achieved my annual goal for 2023, so I took 3 weeks off. Had a nice vacation, Christmas and New Year. This reminds me, I need to put an order in for my a replacement mug and hoodie. Hey, Dave. All right, let's have a look. So we've got Bed Bath & Beyond dropped their earnings today. I tried trading it, I made some money and gave it all back. So I'm kind of net zero on Bed Bath & Beyond at the moment, which is fine. And then I saw Pre was, because I've got Pre on my, so this is Prenetics Global. I've got that on my watch list over here, my watch list screen. So I saw it on the chart moving, so I was able to get in and ride this up. As it broke $3, I was able to get in, and it went all the way up to kind of almost 360. So it went up to 356. That's the high end day. It's pulling back a little bit now, so I got out around 340, pulling back a little bit. So let's see what else is moving. The biggest mover at the moment is actually, no, it's not. It's Cetera's moving up. The biggest mover actually was Prenetics. Well, Cetera's moving up, $14. Not as volatile as Prenetics, but it's still good range. Morning, Dunkers. Good to see you again. We're back at it. Why you spilled tea on my cup? Look down my cup. What I'll do is I'll turn the notification volume off my phone whilst I'm looking at SHC. This key level up here at 1475. A key level here at 1450, obviously psychological level, but 1450 to 1475 is key for SHC. It is actually a lot better this today for whatever reason. I might actually cancel my doctor's appointment, but I've still got gamma E. You know when you get off an aeroplane and your ears don't pop? That's what this has been like for the last couple of days over the weekend. It's my left ear. It's just like it's ready to pop, but it hasn't. So yeah, Jerome Powell's due to speak at I think it's 2 p.m. today at the in the conference today. So we should see Jerome Powell talking a little bit later. Hey Steve, good morning to you. Afternoon. HKD moving up. Let's have a look at what's moving up right now. Still high. So these, what I'm gonna do is I'm gonna mark some pre-market highs out, and data config. Config. Volume by product. Okay, so somebody said I could put the pre-market high on here, but I can't see it. And studies. Okay. I'll have to have a look at that later. Yeah, absolutely, Alistair. Absolutely. So I have my $1 million trade net. That's net. So I had my gross $1 million trade and my net $1 million trade both in December. So I had a good December. Let's have a quick look at my TraderView stats. I've got it open for 2023 right now, but let's have a quick look. I think I was over 10k above the 1 million net, but let's put this down for 1st of January 22. And yeah, 1.25 million gross is what I did. 1.26 million. Gross for the year. So obviously really happy with that in 2022, but I did 1.01 million in the net. So as soon as I did that, that was me done, and I checked out, and funnily enough it just timed it perfectly. I did that on the Friday and I flew out the following week, and I've been on holiday for 3 weeks. So how much is that after taxes? I'll wait till March and I'll tell you, because depending on how good my accountant works, usually it's between kind of 20 and 30%. I usually put 30%, about 20 bucks. I usually put about 30%. I put a third away for the tax man. It's never that much, but it depends, because you've got all your expenses that come out of that. I'll be liquidating some assets that I've got right now for a loss that I've been holding throughout the whole of last year, and I've even added to those positions, and I'll offset that against tax as well. So there's a number of ways to minimize or reduce my tax liability, Faz. So, you know, it works. As a raw measure, I would say about 25% is usually going to, kind of a rule of thumb, 25% is usually going to be taken off you by the taxman. I have more holidays than Santa. I wish. That's my second holiday of 2022. And I didn't have any for 2 years before that because of stupid COVID. So I will be having more holidays this year. In fact, I'll probably be relocating later in the year, but that's a different story altogether. Yeah, do you know any accountant said their faces are made of granite? They're made of stone. To them, it's just numbers on a spreadsheet. To me, it's a life-changing you know, event and a life-changing amount. But to them, it's just numbers on a spreadsheet. Right, where was I? Oh, Jasper. Let's have a quick look at Jasper. Jasper. Wow. That's a big move. From 150 up to 225. It's a $75 move. 30% in there. Well, 50% move. Why is it moving? Oh, Jasper Therapeutics announces development prioritization of briquilimab in chronic disease, including urticaria and lower risk MDS and stem cell transplant for sickle cell disease and other rare diseases. It's a good catalyst for Jasper. Now, I don't normally trade stocks below $3, but I'm going to get a piece of this. No leverage on anything under $5, so that's always a bit of an issue. So I've traded Jasper previously. It's a 20 million float. Not really shorted, but that's really good catalyst that just come out there. This is Jasper Therapeutics. I'll put it on the list. This does have a history of big moves. In fact, very recently, 3rd of January, it moved huge amounts. Did a 100% move back in on 3rd of January last week. This day last week, I think it was. No, I haven't set a date yet. Alistair, that's all to be finalised. She was telling me she was working out her entourage and stuff the other day, which was funny. It's still all fresh. Rishi Sunak isn't using his money to fix the country. Rishi Sunak is siphoning the money's country to inflate his bank balance. That's what he does. He can't use my money because I'm not in the UK. So I got it at 230. We're at 215 on the VWAP right now. So I'm just going to double up for a VWAP bounce. That's not the direction I anticipated this going, but it was time. Morning, Mike. Oh, tell me about it, Alistair. There's always something, isn't there? Well, Bed Bath & Beyond didn't have great earnings, but it's starting to take off now. It sold off on the earnings drop, but it's now put 184, so people are buying it up. Well, I think I'm just going to get out of here. Get out of this. Yeah. Well, it's a long time. It's not been a month. Hey, Super. Still green on the day. Just. That's why I got it where I got out there, because quite frankly, I don't want to be going red. I gave it a little bit more than I would normally have done if I didn't already have a cushion on the day. But I'll look for Jasper to make another turnaround. If it gets back above the VWAP, I might have another go with it. I'm certainly not trading it under $2. Yeah, but if it goes below $2, it completely ruins my my trading philosophy, because then I've got to trade a sub $2 stock, and I don't do that fast. $2 my basement floor. $3 is my floor. Normally I wouldn't trade a stock at under $3. This is usually what happens when I trade a stock under $3. I'm not saying don't trade stocks under $3. What I'm saying is when I trade them, I tend to lose money. So occasionally I'll make money on stocks under $3. I did this last week, but if I then add to the position, I mean, I added to the position at the VWAP. I'm not going to keep adding to a losing position. That's a losing strategy fast. Even though the whole dollar is a psychological level, I'm not going to add keep adding to a losing position until it turns around. Let's have a look at Bed Bath & Beyond now that they're green. They went red for a little while. They went down as low as kind of 152, so that would be a nice bounce. I tried to trade this and got nowhere with it, just because it's Bed Bath & Beyond, and again, it's sub $2 stock. So if it gets over $2, I might look at it. But it was just because it was earnings day and it got particularly volatile around here, so I thought I'll give it a go. And JSpec, I got in for the break of $3 and rode it up. Managed to get, but I think about 40-cent move. I got it up here at 354, just over 350. There's quite a bit of movement. We're getting volatility back in the market, which is nice. It's good to see. So, yeah, Powell is going to be talking. I think it's 2 p.m. market time, so we've got a long way to go before that takes place. We've got a lot of trading to happen before Powell starts influencing the market. I think a few people will probably stay out of the market until after he's had a chat, but it's not like a Fed discussion. It's at the banking conference, so. Do I think it's time to trade these lower price stocks? I only trade lower price stocks there, Faz. Well, I say I only trade. The majority of my day trading is low, because that's where the volatility is. You'll find the volatility with the low float, low price stocks. Not penny stocks. Yes, penny stocks, you can get that high volatility with penny stocks. If you look at the sub $2 stocks as well. So yes, you will get high volatility. It's always time to trade these lower price stocks. Why? Because they're a lower float and they only need one good news catalyst, and you'll get huge percentage moves. So you can take a position with them and make good gains intraday and get out. What I wouldn't say is it time to invest in these stocks? Hell no. The majority of these stocks are garbage companies. They are not good companies to invest in long term. So you get in, get your profits, get out. You tend to find that happens, J-Spec. The first week of the year, there's usually, I mean, I made some good money last year in January, and it tends to be quite a volatile month. Let me have a quick look at calendar. Where's my calendar? What was my biggest trade in 26k? So January was yeah, it wasn't a great month last month until the last couple of days. So on the 27th, I had a 26k day, 25k day on the 28th, and 16k on the 31st. So between the, I mean, we're talking what, 67,000 on those 3 days. The rest, it was like, I only had 2 red days in January last year, but the rest it was like 3 and 4k days. 2k on the 5th. I had a 12k day, 11k day, and a 12k day on the 11th and 12th. Just 1800 on the 14th. But yeah, I mean, wasn't such a bad month last year, January. So I can't any complain. That's got to be the worst Scottish accent since Mrs. Doubtfire. They absolutely are, J-Spec. A lot of these will just get delisted this year. Oh, missed the breakout here. So let's see if this is going to break 350. 347 is the high of that candle. And Bath and Beyond still moving up. Ionvax Pharma moving up as well. Seem to remember they had a good day last week or something. Maybe it was. Yeah, on the 6th. Should have been Friday. Yeah, clinical study. Biovax had a clinical study on Friday. Well, Jasper, back below $2 now, so I'm glad I didn't double down at $2 because it's a psychological level. So it's now at 190s. We'll see. Just wiped out my Prenetics trade on Jasper. And sometimes it'd be like that, you know, swings and roundabouts. What you gain on the swings, you lose on the roundabouts, and vice versa. So sometimes it'd be like that. I&M moving up. InMed Pharma, not great volume at the minute. Range isn't huge either, so just be careful what you're trading. SHC made a nice little move up there. Nice little spike. Needs to get over 1450. As high as 1447. So 1450 is key level here. 1455 is the session high, apparently. Not seeing that anywhere. Oh yeah. That was the where it opened. Oh, it opened the session at 1455. That's why. Mm. 1450 is really the level you want to be looking at with that one. Yeah, I've looked at it, JSpec. For me, it's just too much information. It's actually, if you can take that much information in you know, great, good for you. To me, it's just too busy. I can't concentrate. I can't see the patterns the same. It's just too much information. I'll just give me the. I like my charts nice and clean, so that's what I'll do. I'll keep my charts nice and clean. Usually, the one indicator is enough for me. Jasper now over $2. If it gets back above the VWAP. Yeah, if you like that kind of thing, JSpec, I totally agree with you. I mean, you can use the bubble charts as well. That gives you similar kind of information. Me personally, I'll stick with my volume by price, which is a different way of representing that kind of information. So my volume by price here, it allows me to have a clean chart where I can concentrate on the price action. That's just me. You do you. You know, you do you, boo-boo. Everybody's different, and this is the whole point in trading, is that I teach my strategies and I teach the knowledge that I have to anybody that's on that has the Day Trade with Tony, joins the Day Trade with Tony community. I'll teach my knowledge, but I don't tell you to trade like me. The way I trade more aggressively than I would recommend anybody trade. You've got to find your own style. You've got to find your own and tweak. If you're teaching my strategy and it's a strategy that works, you've got to tweak it to your own personality. Same thing with your charts. I show you how I set up my charts. I show you what I'm looking for. If you find an indicator or a study, or you know, if you find something that helps you trade better, great, use it. You've got to find a way of trading that suits your personality. Don't just trade on the 1 minute. Trade on multiple time frames. The 1 minute might be too volatile for a lot of people, so you're looking for the 2 minute or the 5 minute or 3 minute or whatever for intraday. And again, day trading isn't for everybody. Some people would prefer swing trading because it's not, you know, you don't have to be as involved. Day trading, you're locked into the screen. Swing trading, you look at the fundamentals, you look at the key data, and then you say, okay, this is where my entry is. This is where my range is. So that's what you do, is you're setting ranges with swing trading. You've got your stop. If it hits your stop loss, and you've got your take profit. Now you might have multiple stop loss and take profits for different amounts, but you've got a stop loss and you've got a take profit, and that's swing trade. You can set it and you can go away and do your own thing for the rest of the day. Come back and have I made money or not? I prefer to be in control of whether I'm making money or not. Oh, well, we're a bit late for that. The earnings have already dropped. So this is Bed Bath & Beyond. The earnings came out here at 7:30. It sold off. It bounced up, came back down, and now it's up here at 184, Thomas. So Bed Bath & Beyond, we were covering, we looked at it early. We tried trading it a little bit, but we kind of break even on it. We didn't make any money. I got in for the move up and got out for the down. Tried again. So I got in, got profitable, added to the positions. It moved up. As it came back down, I got out for kind of a small loss, and then I got back in for a bounce on the yesterday's price, yesterday's closing, as it moved up, and covered the loss. So we'll kind of break even on Bed Bath & Beyond. Well, we'll see. If your average is 183, it's exactly where it's at right now. But I don't like to trade, like I say, I don't like to trade sub $2 stocks. I don't like to trade sub $3 stocks. Well, hopefully you'll get some profits tomorrow, Alistair. Forget the volatility and volume, just profits, you know. Get in, get out, get to gold, get green, whatever. Well, let's have a look at the actual Bed Bath & Beyond numbers, shall we? Yes, the insolvency is still a thing, so much so that suppliers were refusing to supply them. If you went into Bed Bath & Beyond recently, you probably were seeing that there was no products on the shelf because they couldn't get suppliers to deliver, because the suppliers were worried that they weren't going to get paid. So the insolvency is still very much a thing. Now, the conference call for Bed Bath & Beyond is still ongoing at the moment. So let's just go back to Bed Bath & Beyond chart. It's still happening at the moment, which is why we're still getting some volatile action as the conference call is happening. It was not great results in terms of the earnings. We had Q3 sales was an earnings miss, 1.26 billion versus the 1.34 estimate. We had earnings per share, or EPS, was also a miss at negative 365 versus the negative 211. The non-GAAP EPS was also a miss, significant miss by about 84 cents. Yeah, not great results across the board for Bed Bath & Beyond. It's now talking about closing stores, laying people off, and various other things. It says here that they've seen significant sales trend improvements on both sequential and year-over-year basis, but the reports are the Q3 earnings are below what the street view actually is. So they're essentially in the conference call now. They're announcing that they're exploring multiple views. So looking for alternative solutions. So the insolvency is still on the cards. That's not what they have decided to go down as yet, but it is still a possibility. Morning, PMZ. Over 350, this is another goer, I think. All right, good to see you here as well, PMZ. So Jasper, 187. I'm going to put Jasper on one of my charts here. So get rid of new there. The S&P 500, the SPY, is down quite a bit today, actually. In fact, the markets as a whole are down quite a bit. The NASDAQ is probably down the most, which is the tech stocks. Tech stocks are leading the sell-off today. So, could be a bearish day. Could be a very bearish day, but we'll see. Absolutely, Colin. Had a great time. I did enjoy my time off, as it happens. I needed it. You know, it's the second. I had a break in September, and then I had this one in December. I didn't have a break any other time in 2022, so I was ready for it. It was nice just to switch off, and I was tempted to get into the markets a couple of times, and I'm like, no, you're on vacation for a reason. Just switch off. And I got told off for opening my laptop actually, as well. Yeah, make sure you, if you're watching on YouTube, make sure you smack that thumbs up button. I really appreciate when you do. It just helps with the algorithm. Same thing with the old tickety talk. You get tapping that screen. If you're not tapped it at least a dozen times, do it now. Yeah, so if you need to tap the screen 12 times for good luck for 2023. It's true. Believe me, you get a wealth of good luck comes your way if you tap that screen 12 times every time you come on my feed on the TikTok stream. And if you'd be surprised at what happens to the market overall if you just smack that thumbs up button on YouTube for me. If you're wondering what I'm talking about, hit that thumbs up button, you'll find out. Jan, not traded that for a while. Making moves up. Let's have a quick look. 16 cents ATR, which is quite large for a $2 stock. So there must be some kind of catalyst. This is Jan 1. Right. Yeah, so they've just announced that they've completed the acquisition of Jasper Therapeutics. So Jan 1 has just completed an acquisition. It's just hey Spec, I'm ahead of you slightly. Obviously the delay, you typing that and the delay on the feed. Yeah, no problem. Who's hijacking me super chip? Here's one for you. Is it Jan or is it Yan? Jan 1 or Yan 1? You know, how would you pronounce this stock? Janone. I said Jan 1. But, you know, Yan 1 could be. Yan 1 is 2.6 million float, not really shorted. It moved up huge amounts last week. Went up to like over $2. I have traded this before when it was up over $3 last year. Yeah, let me know if somebody's trying to copy my lives there, super chip. Just let me know, and that way I can block them. Yeah, if you're it's looking pretty weak. So if you're into trading the futures market, the markets, well, futures obviously it's not, but SPY looks weak today. I missed the breakout. 1450 was what I was looking for. I'm just going to get in anyway. I'm in late. I know. $15 is key here. I was looking for. There we go. There's $15. Will it hold 50? Got over $15. I'm just going to hold this for the move up and I'm just going to add to it, actually. Spreads are quite rangy. We'll get over $15 on the bid, and I'll take some profit off, and then we can look at this. I marked out there 1450 as a key level, 1447 actually, but 1450 is a key level. This went up to 1638 yesterday. I do normally stay clear of sub $3. $3 is usually my floor, trading floor, and $2 is my basement floor. So I very rarely trade below that. But occasionally you want to mix it up. You've got to have more than one string in your book. Why can't I buy more? All right, okay. Never mind. Husty with Tony. Okay, I'll have a look at that later. Oh, hello. There's some movement. Already. Call listening to the disc. Please, for the love of God. Gold going up or down? Both, depending on what time frame you're looking at. I'm looking for support here at the $0.50 level for a move back up. A new candle, exit indicator. Well, the exit indicator was this engulfing candle here, which is I should have got out here, really, as it broke new lows, but it blasted past. So 1468, 1467 should have been where I got out. I was distracted. I'm trying to multitask. Not a good idea. Ultimately, gold's going up. It's a good store of value. It's not financial advice. I'm not a financial advisor, but in the long term, gold will continue to rise. It's a good store of. It's always the default. What's the word I'm looking for? It's the default haven in times of high volatility. Yeah, well, you know, you can't go wrong with this. It's like property. If you want to buy, the thing is with gold is it's very difficult because the volatility of gold is not. It's not like you're getting with this stock. So you're not going to day trade gold. You'll swing it. You might move your money and hold it in the short term, in periods of instability, but you're not going to day trade gold. It's just not volatile enough. There are other futures that are volatile enough to day trade, but I would say gold's not really going to be one of them. Well, not for me at least. I dare say some people can, because you're looking at those micro movements, incremental movements. I've got a Daytona myself. I've not worn it for ages. Little chocolate one. Chocolate and rose gold. Low float stocks are a lot more volatile. That's what I'm saying. Your low float, low cap stocks are a lot more volatile than what gold is. And it's volatility as a day trader. It's volatility and two things you look for: volatility and volume. It's a volatility that gives you the range to profit from. It's the volume that makes the moves reliable. So I was looking at 1450 as the entry, and I missed it, so I got in late, and it's my own fault. It moved up. I added for the break of 15, didn't quite got there, got rejected, and I'm still holding the position. Now, I potentially could lose about 5 grand on this because I've got this line here, which is previous resistance is now support. If it breaks that, then I'll be getting out. And that would cost me about 5,000, but it's holding it fairly well right now. I'm looking for another move back up. But most Rolexes, in fact, I like watches. I've got quite a nice collection now, and I bought my first AP, funnily enough, last month. I'm not wearing one today. Got one on my bed, you know. I bought my first AP last month as well, as a result of having coming off a really good year. But watches are quite, because they're a collectible item. It's like art. It's I wouldn't say it's a good store of value because it's subjective. But a quality watch is not going to lose value, which is the point. You're gonna, if you buy a good quality watch, it's going to at least retain value and it will appreciate over time. You're not going to get, I wouldn't say they're great for investments. Some people do, depending on if you certain watches would be, but I think a good quality watch is, if you like watches, it's worth putting your money into, because it's, you know, you can go out and sell you on the resale market for more than you actually bought it at retail. That's usually what, but you're not going to get huge moves with a watch. Why am I not getting filled? I got filled there. Liquidity, that's why I'm not getting filled. Low liquidity. Spreads at like 20 cents. Need to get out. Get me out. Come on. No one to sell to. There you go, mate. That's the problem, Super. There's no liquidity in it. There's nobody on the other side of my trade. You always see it's a zero-sum market. So if you're trying to sell, let's just kind of rewind that back. If you're trying to sell 1,000 shares, someone's got to buy it. It's a zero-sum market. You can't sell it into the ether. And likewise, if you're trying to buy 1,000 shares, you need someone to buy it off. Now, when the liquidity dries up, that's when you tend to find that the spreads get bigger. The difference in the levels on the level 2 get wider. And that's when you get very poor fills, slippage on your fills, or you just get you don't get filled at all. Like I was waiting ages to get a fill then, because lack of liquidity. Oh, no, we've created a little bit of a hole to fill, but that should be okay. There's enough volatility in the market today. There's enough action for us to be able to make that back up. Now we're just waiting for something to raise its ugly head and say, look, I am the stock of choice. Iora sounds like a soft drink to me. Oh, Bed Bath & Beyond earnings, you missed them. They were at 7:30 this morning, market time. I'm not seeing any particular catalyst on Iora today. We've received feedback from the FDA yesterday, but nothing today. So we'll see. So Bed Bath & Beyond, we had the earnings earlier, 7:30 this morning. It moved up. We had the conference call, and nothing really eventful. So it moved up on the conference call and then sold off again. So we're kind of ranging between 160 and 180. Bed Bath & Beyond. It was the earnings miss. The earnings were a complete miss across the board. Earnings per share was a miss. Sales was a miss. Revenues. It wasn't a great read. Hey, Imran. Let's have a look. Yeah, 6 minutes. The Fed, Jerome Powell's has a chat in 6 minutes. It's got. We should be able to get that. Let's see if I can get that. It's today the 10th. Let's have a look. We've got the CPI data coming out later this week as well. It's the Symposium on central bank independence, apparently.
Interactive Brokers introduced new simplified.
I'll stream it live, why not? Yeah, the earnings is finished and the conference call's finished as well. Well, it depends where you are, because the US seem to redefine recession whenever it suits them. Otherwise, we would already be in one. I don't trade it. I don't trade futures or commodities, Santana. I've already been asked about gold already today. CPI is Thursday. It is indeed. No, it's not. It's not. It's not a Fed meeting today. It's not a rate hike as such. It's the he's speaking at the Symposium on central bank independence. So that's going to be 3 minutes, top of the hour. So what I'll do is I'll put that up if you want me to. In the meantime, so that's the top of the hour. In the meantime, let's look at Bior again. So that's making moves up. Comes back below 280, I'll get it. Ouch. For the bounce on the VWAP there. My ears just popped. But it's not changed anything.
And how much these concerns reflect specific challenges of the 70s and 80s or more germane issues. Then we saw a downturn of inflation, and to many that
Okay, so that's just conference that he's at, but I'll bring that back up in a second when when Powell comes on. He's not on yet. Ow, that hurt. Yeah. How do I get a pre-market VWAP? Simply because it's based on the volume and the price action. It's I don't know if you've not got a VWAP on your charts, but I certainly have on mine. It's essential for me to trade. SPY just booming up, made a big pump. Here we go.
Should we rethink central bank independence and central bank mandates? That is, are there good ideas or even concrete proposals for new reforms?
I was on this soon, so I'll let you talk to this guy with the weird accent. Sounds like Gru from Despicable Me, because Powell's coming on shortly.
Then
where is Powell?
Discussion within the panel around these initial remarks for maybe another 15 minutes. And after that, we'll turn to a round of Q&A involving the audience. So think about questions, and please think about succinct questions rather than statements beforehand, and try to relate them to the three major questions that I outlined. And in the last 5 minutes, panelists will be able to make some final remarks. Okay, so now let's go to the initial remarks, at most 5 minutes for each of you. I'm sure these remarks will span many aspects of the broad panel theme, but by agreement, each panelist will put more emphasis on one of the three main questions that I outlined. So Ken and Mervyn will touch on question number 1, Claudia on question number 2, and Jay on question 3. So without further ado, please, Ken Roloff.
Well, first of all, thank you very much to the organizers, to the Riksbank, for inviting me to speak. I think you've heard so many remarks about Stefan. I can just summarize them by, in the central banking community, he is regarded as a guru, that you don't know the answer, some hard question. He's a person you really can go to and get, a very deep answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more the question 1 that we've had here. And I think the academic literature on this started in the 1980s. But of course, really it goes back among practitioners far earlier than that. But I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank back in the 1980s. That was a rarity still. The Bundesbank had achieved that, but most countries had not. My own contribution was to develop a theoretical model that would try to address how it would work, why it would work, and it was an answer to a very abstract question posed by Kydland and Prescott and Barrow and Gordon about why you might get stuck in high inflation and what you might want to do about it. My paper looked at various ideas, including using an inflation target, appointing people who had already had a reputation for having a strong anti-inflation commitment, and needless to say, I was very inspired by the great Paul Volcker, who I was working below, very, very far below, but I was working below Paul Volcker at the time when I was working on that. And there's been just tremendous amount of literature since, taking this to many places. I think you're all familiar with Europe, New Zealand, the United Kingdom, but I wanted to just really emphasize an area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think most people don't quite understand about the efficacy of the concept, about how important it is. European emerging markets, if you looked in 1992, there were 40 countries with inflation over 40%, and that doesn't even capture things because a lot of them had hyperinflations at the time. And to get out of it, the early solution that was tried in many places for a long time was, well, the dollar's really good, or let's fix our exchange rate against the dollar, and that was very good for those of us.
He's on this banking symposium,
but on the whole didn't work.
central banking symposium.
And
Miyako's not impressed
really
at all now.
Transformation where some very bold emerging market central bankers got the
I don't think
idea,
it's banking. I mean, it's not exactly the most glamorous of industries. Come on.
There are many, but I would single out
Puts me to sleep at the best of times.
Brazil, Guillermo Ortiz in Mexico, for example. And I think people forget, but when they were trying this, people thought, this is ridiculous. You can't
Excuse me.
independent in these countries with these weak institutions. And the IMF also over time really played a very positive role here in pushing the idea. By 2015, inflation was actually very low across the world. It's not today, but even in places it seemed unimaginable, not just the former Soviet republics, African countries with inflation under 10%, even under 5%. And indeed, many people have forgotten, that central bank independence was ever needed. I invite them to read about Turkey, for example, where the president has fired central bankers the way Henry VIII changed wives, and you can see.
I've got a good head of hair, you cheeky git.
I would say
Just
many refinements once you have an independent central bank.
starting to go silver.
Literature to which many people in this room have contributed.
Right now, it's not doing anything. It's down at
the absolute
240s.
Starting point to this. If you look at many of these emerging markets, they weren't really doing.
I'll be getting out if it breaks 240.
Still doing inflation targeting, but they've used this as a device to establish their independence. Now, just to sort of summarize, I would also say there are so many things.
242 right now on the bid, so I'm just going to wait for it to break 240 and get out.
The extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank, and I think that's also part of this coming from independence. I think another thing which people in this room are very familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging ideas.
This is not.
There's been a huge networking.
This has got to be one of the most boring conversations ever.
Ideas and also support.
Stop waffling and tell us something that we don't know.
Behind you, a little bit, your government listens, and I think we can point at.
You guys asked for this.
Of that. And then, certainly recently, the central bank independence has been under attack. I certainly don't think it's an idea, which is over at all.
I know that I can be monotonous and tedious at times, but you guys asked for this.
Central bank independence has been the most significant positive development in macroeconomic policy since the Second World War. Thank you.
Right, it's only Powell that we really want to see. He's the last one up. I'll tell you what I'll do is I'll come back to the this when Powell starts actually speaking.
Torsten, thank you, and good afternoon, everyone. Torsten's given us 5 minutes.
Who's this guy?
So I shall reserve my stories about Stefan and the.
We've got 5 minutes each. So Powell will be back in.
Over dinner.
Powell will be back on in about 10 minutes. This guy's got 5 minutes. Then we've got another guy who's got 5 minutes. So I'm just gonna
in the context of the great inflation of the 1970s.
get rid of this.
And also the stagflation of the 1980s. The former was the consequence of, I think, in large part, an intellectual mistake at the time.
I'll keep the sound on. We can, and then when Powell starts, we can take a proper look.
Higher rate of inflation would make it possible to sustain a lower level of unemployment. But
It's not as good as the music, I don't think. But hey, look.
Two large oil price shocks. Discretionary monetary policy led to rates of
It sold off.
well into double digits, and in
So,
some cases, such as the
where was it? Here it is.
and as Ken
It
said,
moved up, it came back down. So I got it.
higher still. And the stagflation of the 1980s was the painful consequence of efforts to reduce inflation.
Oh, we've got 20 minutes to the bell.
While inflation still remained relatively high.
Powell will be having a chat in about 10 minutes. We'll just talk over this nonsense in the meantime.
In this long-run trade-off between inflation
Marathon Digital seems to be having a little bit of a moment as well.
for price stability, which had been made over many decades before, arguably most persuasively by
SHC moving back up again.
in his tract of monetary.
Yeah, we just lost. How much did we lose on this? £5,000 on this one.
After the breakdown,
Let's get over 4. Got rejected at 1450 again. Back up above a 1450, we might get in there.
Exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden.
Well, you seem to be profitable there, Alistair.
Some of us remember.
Why don't you come and do my job for me?
Raised to 500%, and the same applied to Finland. Now, politicians drew two conclusions.
I genuinely don't know what I'm doing, Alistair. I mean,
70s and 80s.
all I know is that I'm doing it well.
Inflation was up.
$1 million last year. See, I can't really complain on that.
Afloat, therefore, that a domestic framework was needed to ensure.
Good morning, Leah Santos.
That framework was the adoption of inflation targets. And
Imran,
the measures required
question?
to eliminate inflation were also deeply unpopular, with high rates of unemployment for a while. So politicians found that setting interest rates wasn't actually much fun.
Oh, no
So
shit,
why
Sherlock.
give that power to an
Setting interest rates isn't much fun.
mandate set by Parliament. And those two conclusions led
I mean, come on. Who thinks... If you think setting interest rates is fun, you really need to get out and actually learn what fun means.
with an inflation.
I mean, come on.
Now, the policy
It's probably one of the silliest statements I've ever heard.
I think helpful in understanding the challenges to monetary policy today. But there are three important
Cheers, Liquid.
and now. First, in the 1990s, the memory of the great inflation of the 1970s was still vivid. Today, there is almost no one below retirement
We've lost 1 cent on this, but because of the spreads,
of almost 50 years ago.
it looks like I'm
And until
down
recently, low inflation
£2.5 grand.
had come to be taken for
Only 1
granted,
cent.
both by economists who mistakenly assumed that inflation in the medium term was determined,
I don't know about infinite, but
and by the public who had stopped thinking and talking.
you took the course there, Alistair. You let me know if you found it useful, if it's helped you make any money.
1990s has been somewhat eroded. Secondly, in the 1990s, the popular support for low inflation encouraged politicians to grant independence to central banks and
14 cent spread, that's shocking.
when it was necessary to raise interest rates. I think today governments
I do get got a dog snoring, absolutely. So that's the chow chow. The only people only come onto this stream to listen to the dog snoring.
And central
Alan.
banks are no longer buying their debt. So external pressures on central banks.
The chow snore is a unique attraction to this stream.
Days of 1990s. And third,
Got 15 minutes to the bell,
I
guys.
think this is in some ways the most important point.
We're currently trading Sotera Health.
Targets
It's not been going well for us at the moment.
as a theory of inflation.
We're caught between the spreads right now. Just
In the models currently
there we
fashioned
go.
in academia and used by
Yeah,
central
caught between the spreads.
The inflation target is the variable that closes the model and determines the path of inflation in the medium term. But the original aim of inflation targets was actually to focus and change the way decisions on monetary policy were made. That is why inflation targets were accompanied by measures to increase.
I'm fully expecting me to be green by the end of the day as well, Alistair. Don't worry about that.
Accountability of decisions and decision makers, respectively. Clear
Hey, Polka,
explanations
I've just taken 3 weeks off. That's I wouldn't say that's months, but
were to be set out not as a matter of mystique by a central banker mumbling and saying very little. They were set
it's
out
only
in
fair.
speeches,
Got to give them a head start.
evidence to parliaments, and reports such as the Bank of England's inflation report. And although these innovations remain, I worry that model builders have tried to use the inflation target
I'm long on this one at the moment.
of what drives
I'm looking for it to move up towards
Because as a
retest
result,
15.
any deviation of inflation
It got rejected at 15 earlier. So I'm looking for it to retest 15. What's crucifying me at the minute is that the spreads keep getting rangy.
So
I'm looking for to break the quarter dollar, the three-quarter dollar up towards 14.90 and retest 15.
Along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
Mara's having a good moment. It's not up huge amounts. Marathon Digital.
Thorsten, thank you very much to the organizers, and I was very honored to be invited here to speak on this panel on the occasion of the farewell of Stefan Ingves. For me, when I joined the ESRB, the European Systemic Risk Board, he was one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to need to act when it's needed, and the importance of clarity in communication.
That'll get bought right
I'm
back up.
saying this not to break the rules, because actually rules are important, and that's going to be one of my main points here, but I'm saying this because I think this is so crucially important at the current juncture. As we've just heard, I think in some sense central banks have enjoyed a capital of inattention or rational inattention to price risks, to price and financial stability.
The dog doesn't think too much of this conference.
Very low inflation and moderated risks to financial stability, so the public didn't actually pay much attention to central banks' core mandates. But current macroeconomic developments, not just cyclical but also structural, really challenge price and financial stability. So explaining central bank independence and
15 cents down at the minute on the bid.
More important.
Pretty much on there on the ask, so
Certainly protected by institutional safeguards.
just spreads that are rangy. And you've got to factor that into your risk management as well, is that if you've got a volatility range, an ATR, average true range, if that's higher than wider than the spreads, then you can go for these volatile stocks that have got a rangy spread.
As has been mentioned, inflation and risks to financial stability have been low.
And we're at $15, that's what I'm looking for.
Delegate the task of price and financial stability to technocrats.
Break 15, there's 15.
And pay relatively limited attention.
There we go, I've got nice fill there.
Now this has changed, that's my second point. So
15.11.
we have first of all inflation, which is well above targets of central banks today, and it's one of the main concerns of the general public. I looked at the most recent Eurobarometer poll, and there 42% of the respondents, and I think that's actually on the low side, cite rising prices as the most important concern, and actually that ranks above issues like energy supply and the international situation. And I would argue that actually concern about high levels of prices and perceived inflation is going to remain even if and when inflation rates recede. So that's the first challenge. The second challenge is that during periods of low interest rates...
The question here is, are we going to hold 15 and move up, or do I get out and take the profit?
We've had 2 decades of declining corporate insolvencies, very low credit risk, strong support to...
We're over 15 now. Let's see if we can get 15.25. 15.09 on the ask.
And that, we think, leads to an
15.10 on the ask.
Economic risk going forward, and also the expectation of further policy support. So higher vulnerabilities in the financial system is the second vulnerability. The third, we have high levels of debt, and that creates tensions between fiscal and monetary policy.
I've been trading for about nearly 4 years now.
But also more
Liquid.
difficult to actually explain the role of central bank independence and to act accordingly.
Day trading, well, I've been trading for a while, swing trading and investing for quite some time. But day trading for about 3 years now.
Too long for longer to avoid
Full time for a little over, but yeah, full time for 3 years.
Increases vulnerabilities in the financial system. So if we delay the necessary monetary adjustment, that can lead to the buildup of further vulnerabilities. And I think if we look back to the global financial crisis,
I'm going to get
we see how
1550
monetary
here.
policy can actually come or be at risk to come under fiscal or financial dominance. So at the time of the crisis, central banks provided liquidity to stressed financial institutions.
At 12 years. No, I've been investing for about 12 years. Well, a bit longer, about 15 years.
And fiscal funds were ultimately
But day trading for, well, since the pandemic, really. That's what I got laid off in the pandemic, and
gaps in the institutional framework needed to be closed. So
as a result, I submersed myself in the markets, taught myself how to trade.
Credibility of central bank also may come under threat if there are insufficient fiscal backstops.
Well, that's a new low, so we'll just get out there. It might move back up, but there's a couple of exit indicators there, so...
And that help us to prevent financial or fiscal or
in some cases, yes, it was a blessing.
And these frameworks are actually complementary to the...
So now we're in a manageable hold, so 6K is a manageable hold. You can cover that up at the bell, 8 minutes to the bell.
In Europe, primary law assigns a strong role to central bank independence, and the legal basis in the euro system is even stronger than in Germany. So changing the treaty would require unanimity versus simple majority when it comes to changing the Bundesbank law in Germany. Maybe just as an interesting side remark, there's interesting historical research showing how independence...
I'll get green on SHC today.
...made into the legislation in Germany.
We'll wait for the pullback.
Independence was discussed in the 40s and 50s. There was actually stronger support for independence.
We're looking at, what's that, the high here, 1510.
Obviously,
yeah, let's see.
When it comes to
2-minute candle, 1510.
The frameworks, the macroprudential frameworks that we have to consider that
Doji, upward doji, shooting star, if you will, on the 5-minute right now. That's a reversal indicator. We've got the upwick on the 1-minute and the 2-minute, shooting star on the 2-minute. So a lot of exit indicators, well, not so much exit indicators, I've already exited, so it's reversal indicators there.
But still, we need also independence for financial stability policies.
I can check TAL education for you, no problem.
To avoid an action bias and to avoid that authorities...
Nobody trading it, no volume.
The last point I would
right now, 1.2% down on the day, 78,000 shares traded in the session, and
this can actually be
no real pattern emerging. It's very sideways. It's down on the day, but it's very sideways. It's not. There's nobody trading it right now. I mean, like I say, if you're holding bags from last week over $10,
consequence of policy choices. But these policy
it might move up because the Chinese stocks are getting good news. So a lot of the Chinese stocks are moving up with good news. So there's that much.
Stability. So we need a translation from the language spoken by the technocrats to the language spoken by the general
Oak Street.
public,
Nah, moved up, but it's not really done anything since. So $31, it's of interest, but it's below the VWAP.
comic strip explaining why financial stability
What's up with my audio?
boring. And if you get the chance,
Flip Jug, are you talking about the speaking that's on the audio? That's the central banking symposium in the background.
and we need to understand what's going on around us, and so we need a lot of communication channels also to the general public. Thank you very much.
Powell's coming on now. So do you want to let me know quickly? Do you want to watch Powell or do you just want to listen to him?
It's a pleasure and an honor to be here today.
There's Powell.
I'll start by thanking you, Stefan, for your friendship, for being a great colleague. You are an absolutely essential person in our world, and you'll be badly missed. I'm going to use my comments focusing on the U.S. context, and I'll address three main points. First, the Federal Reserve's monetary policy independence is an important and broadly supported institutional arrangement that has served the American public well. Second, the Fed has continuously earned that independence by using our tools to achieve our assigned goals of maximum employment and price stability, and by providing transparency to facilitate understanding and effective oversight by the public and their elected.
We've got 4 minutes to the bell as well. So
third, we should stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So starting with the first point, as Ken and others have pointed out, on the first point, the case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits.
I'm seeing sideways action at the moment. PMZ.
When inflation is high, can require measures that are not popular.
I'm with you, David.
Raise interest rates to slow the economy. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. However, in a well-functioning democracy, important public policy decisions should be made in almost all cases by the elected branches of government. Grants of independence to agencies like ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations.
He is the
independence comes a responsibility to provide the transparency
human equivalent of Xanax. He really is.
By Congress, which in turn supports the Fed's democratic legitimacy. And at the Fed, we treat this as an active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people. We are tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly address climate change should be made by the elected branches of government and thus reflect the public's will as expressed through elections. At the same time, in my view, the Fed does have a narrow but important responsibilities regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision.
I'm in the bathroom.
Reasonably expect Super
Oh, there's the bell.
So what is that fault? Well, here at ASFAL we believe in what's called the device equality. That means that we believe, regardless of your background, your age,
our economy, or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker. Thank you.
Excellent. Thank you all four for these lucid remarks. Now you'll have a chance to agree or disagree with anything the other panelists just said, or you can also get into one of our main
Market
questions
rallying.
covering your initial remarks, especially if you have views on desirable reforms of central bank independence and mandates. Mervyn?
Well, I just want to say how strongly I agree with what Jay Powell just said.
Around two major challenges: recurring inflationary episodes and recurring financial crisis, and how to grapple with those issues. And central bank independence and the mandates are institutions that are directed at meeting those challenges. So as Beatrice reminded us this morning, in the 1990s, there was a wave of institutional reforms in high-income economies when they adopted inflation targeting and were backed up by more legal.
There's a lot of selling off, but the market is, these early gappers have seen a lot of selling off, but the market seems to have gone green on the day now.
Bank of England plus ECB around the newly formed euro. And arguably, these reforms had their roots in the challenges of the 70s and 80s, high inflation spurred on by large supply shocks and sustained by high inflationary expectations. So, a first question for the panel: which were the main concerns behind the 1990s wave of central bank reforms in terms of practical
I really need the bathroom.
experience and perhaps also academic thinking? And how much did these concerns reflect specific challenges of the 70s and 80s or germane issues? Then we saw a downturn of inflation, and to many that looked like a major success, tolerable losses of output and employment. So the main policy challenges in the next few decades were instead to be about financial crises, how to recuperate from the great financial crisis.
Yeah, I've had enough of
how
this.
to save off new ones, not least at the onset of
Oh shit,
COVID-19.
I've just lost money.
So we got to
On
see
that one?
new financial
Okay, never mind.
regulation, QE, unconventional central bank intervention, and policy rates at record lows for a long time. So the second question for the panel then is, which new concerns were raised by the events and challenges in the 2000s and the 2010s in handling financial crisis and deflationary?
Right, let's get back to get rid of this guy.
Challenges suggest new trade-offs.
And let's get the music back on. He just made me lose 10k. Right, okay. Looking for 60. 39, 39, 1539, 1550. Should have taken some there at 40. Okay. opening range here between 14.50 and 15. So there's a whole dollar in the opening range. We're just looking at this. So this is Sotera Health. Stop in place there. Just ideally look for a bounce on the VWAP there, but we're stopping there at $0.50. I'll change my scanners over. I've not done that either yet. I'm looking for a break of these pre-market high. Is ideally what I want to see. 1580. $15 is a key level. But I want it up at 1580. Break that pre-market high. Why did it crash? Why did everything crash? It sold off. MMV. Let's have a quick look at MMV whilst waiting for this to move up. It didn't crash, it's just sold off. I mean, it's got volatility. It had a bit of a, I think it had a halt here at some stage. Volatility halt to the upside, then it's down at 281. So it's still within that. Yeah. So we're currently within the opening range candle. I've got my stop at the bottom of that opening range on the 5 minute. If you look at this on the 5 minute, zoom in, you can see this opening range candle. I've got my stop at the bottom of that 5 minute. I'm looking for a move up, break the opening range high, and then break the pre-market high. That's the ideal. That's what I'm looking for. Whether we get that is anyone's guess. Why did it crash yesterday? Oh, I'll take a look if there's any catalyst as to why it actually sold off yesterday for you, Suvan. So I'm just going to move this stop up to 67. I'm giving it 50 cents. I'm in at 17. Yeah, 667. I'm giving it 50 cents. Right, so you wanted to know why MMV crashed and sold off yesterday. Multi-metaverse holdings were very volatile yesterday. It sold off. So let's have a look at yesterday's. I don't see any particular catalyst from yesterday with MMV. It was just extremely volatile. All right, DMTK, low volume. OTLY, not great volume either. Golden Sun Educations, better volume. At the moment, everything's fairly low volume in terms of momentum stocks. The stocks that are actually moving, they're moving on low volume. a lot of the original gappers that I was looking at for gap and go candidates sold off. So they gapped and crapped. So you've got, it's the opposite of gap and go. It's they gap up and then sell off. So gap and crap. But this still has potential. You want to see it breaking. I mean, right now we're getting narrowing triangle. So it's got to break one way or the other. So this is, draw the lines here so you can see what I'm talking about. Narrowing triangle right now. It's subjective how you draw it, but at over 1520 we might get a breakout. It's this level here that we want to get above. Current session high is 1547. So I'll just duplicate that for that. Get rid of this. We're just watching this now. Sideways. It's not really doing anything at the moment. Like I say, we're getting in lower highs, higher lows. So it's got to, you know, that narrowing wedge. It's got to, or narrowing triangle, narrowing pennant, whatever you want to call it. It's got to break out one way or the other. That's on the 5 minute. So 5 minute, the high is 1528. So what we're looking for is the break of 1530. The spreads have narrowed a bit, which is good. Break that 1550 level. I can swap this for a trailing stop. Looking for the break of 1550 here. The current session high is 1547. The pre-market high was 1580. Actually, it wasn't. It went up to 16. Yes. Post-market yesterday went up to 1640. So 1580 is the pre-market high, and then we've got 1640 as the yesterday's post-market. 1550 is a key level. Yeah. $15 is a key level as well, but 1550 is a key level. Gonna get the break of that, and that's a nice move. Looking for the break of 1580 now. Take a little bit off there. That's the pre-market high. We're looking for the break. Just tapped it. We'll get over 16. $15.80, it's pre-market high. There we go. Tap 16, pulling back now, wait for the pullback. Back under 10k in the loss department right now. So that's back to where we were pretty much. I've pretty much got what I wanted. It's just that stupid trade during that conference was I mean, got in, just couldn't get out. What else is moving? Golden Sun. High at the moment 62. I really wanted to find support at the $0.5 there. High of this candle is 62. Let's look for anything else moving at all. A bomb. That moved up into a hole. This is not great volume either. Not enough volume. Selling off. Come back to that when it's ready. Jasper, nice double bottom there. Interesting. Over 190 could be interesting, but I prefer to wait for it to break $2, but it could be interesting. All big sell off there. We might look for a reversal, kind of a dip to rip. CureVac again needs to get over the VWAP. I can take a quick bathroom break while we're waiting for some action, and I'll be back in a couple of seconds. HKD making moves. Big moves as well. I don't think I can get leverage on HKD if I'm right. Yeah. It's like 50%. So basically, I can only trade 50% of my equity on HKD. It's that volatile. That's crap. So that's another reason I'm not going to be trading it. Let's see what else is moving. Bed Bath and Beyond, no. Go back to SHC, that's pretty much sold off. I got to the 16 I was looking for, but will we get a bounce at the VWAP? I don't know. Let's have a look. And Voyager. Making moves up. If it breaks $8, could be interesting. It's on a nice little move up actually, Voyager. I'm not seeing any halts other than EBON. Not a lot of volatility halts. So what? The 20 minutes in, so there's not a lot of volatility at the moment. Legion, very low volume. Let's have a quick look at it though. Legend Biotech. That's a good move. Not great volume, but it's a good move. Don't really want to trade that on that kind of volume. SHC's got good relative volume as well though, so will we make a comeback? A bit of a bounce on the VWAP here. So it's sending support. It's an upwards channel. This is going to break down at some stage. It's an upwards parallel channel on the 5 minute. Yeah. It's the same gradient on all three. So that channel's going to break down. Probably not going to be safe. Yeah, Bed Bath and Beyond. Over $2. Big move. That just moved, what, 40 cents? That last 5 minute candle. Bed Bath and Beyond having a good moment. Just trying to make a comeback. Bed Bath and Beyond. Let's see what's going on here. If we'll break new highs. Looking for 225, 220 in the first instance. $219. 220 is the high of this candle, so we're looking for a new high of day. $219, 220 on the ask, going up 220 on the bid. And we can take some flat topping at 220. This is going to break 220. There we go. Take the first little bit off at 220. We're looking for 225, 221. $221. That's the 222. There's the new high of day there. 223. 224. $1/4. Can we take the $1/4? No. Take half off. Just lock a little bit in. Safety measures. Let's look for the $1/4. 225. Current high of day for 224. So just rejected the $1/4 there. Okay, so I've got out for break even on that last third. Oh, it's $400 on Bed Bath and Beyond. Let's get better music than this. It's just, this is depressing. There we go. It's adhering to the VWAP as well as SHC. As VWAP as support. Okay, let's see what else we can make money on. We've got a little bit of a hole to fill today, so we're going to do it. We're not only going to get green, we're going to get other gold today. Let's see if we can do it in the next half an hour. We've got 215. SOS. No. Nope. Nope. That's double top, so that's gonna come back now. Nope. Oh, I don't like that. Do we not like that? No, we don't. You can wait. You'll be snoring all day. You wake up, you want me to take you out instantly, you can wait half an hour. I go back to sleep, start snoring again. They've not given you enough likes for me to give you any treats. Explain how I found... But it had earnings today, Willy Wonka. How I found Bed Bath & Beyond before the market opened. It had earnings. Earnings came out at 7:30 this morning. Aside from that, Benzinga tells me what's moving whenever it's moving. All the time. I swear by Benzinga. Need to break that 1550, let that $half level again, proving a little bit problematic. Well, I tend to look at market time. So it was 7:30 market time, so that would have been Central 6:30. So East Coast is market time. But check the earnings calendar as well. I mean, I posted in my Discord all the earnings that are coming out today, including Bed Bath & Beyond. And if it's a particular stock that you like, then check when they have earnings. Bed Bath & Beyond's been in the news quite a lot lately. It was actually on Benzinga this morning, not Benzinga, Bloomberg this morning. They did a little bit of a feature on it as well. If we can break this, I've got an ascending resistance line right here on the 5 minute. If we can break this, Well, there's no reason we can't get to the next one, which is about 1620. I'll put the stop in place there. 1547 is the stop. So that gives me like 6 cents while it's moving up. How much is Benzinga? Benzinga's not a charting tool, it's an information platform. So it tells you, I mean, it does show the charts, but it actually shows the charts from TradingView. Benzinga is like what I use for my scanners. So the scanners that you can see in the middle of the screen, those are Benzinga. The scanners, my news alerts, my signal alerts, that's all Benzinga. It costs me a lot less because I'm a Benzinga partner. But the listed price is $177 $177 a month. If you go for a longer, you can get about 50% off if you pay for an annual subscription. You can go for a longer term. Just move this up slightly so it's below that low 57, 56. I'll put it so low of that candle. But also, if you use my, you check my link tree. If you use my link tree or the description, if you're watching on YouTube, there's a discount code there for Benzinga that'll get you 35% off. So you can get up to about 65-70% off if you go for an annual subscription with Benzinga. And I pay, I mean, they charge me like next to nothing because I promote them. Okay, so that stopped me out. We're still 8,000 in the hole today, but we've got time. I sound like Mr. Incredible, but there's still time. Lovely. There's a lovely flag forming on Bed Bath & Beyond here on the 2 minute. If you look at this on the 2 minute, you've got the flagpole up, and then you've got this flag formation here. So higher lows, lower highs, and this might get a nice little breakout here. You can't get that $250 this time. Absolutely, Thomas. Well, let's go back to the 1 minute chart. I don't use Benzinga for charting. I use TradingView for charting because that's what the Benzinga charts are. They just import the charts from TradingView. I use Benzinga for alerts and signals and news and stock information, and so doing it. The fundamental information that I get from Benzinga is I get most of that from Benzinga. And then my trading platform is DAS Trader Pro. So this is DAS Trader Pro, which is my trading platform. What you're watching me trade on right now is DAS Trader. DAS, Direct Access Software is the acronym. So DAS. $20,000 in this, just over $20,000 in this right now. $22,000 in this in terms of equity. But it's not huge. Interactive brokers, I do use them. In fact, I've got more money with interactive brokers than I have with any other broker. So interactive brokers are one of my preferred brokers. But depending on where you are, they do employ the PDT rule. So I'm not based in the US. If you're in the US, you have to adhere by the pattern day trading rule if you use interactive brokers. The same applies if you're in the UK or Germany. They do apply the pattern day trading rule. So that's a bit of a downside, but they have a great options chain. They help you if you want to set up a retirement account, so an IRA or a Roth IRA, if for you to self-trade and manage your own pension if you're in the US. It's known as a SIP if you're in Europe, so a self-invested pension plan, and Interactive will help you set that up. Whereas brokers like Capital Markets Elite, they'll allow you to trade in a SIP or an IRA, but you have to do it all and set it all up yourself. So it makes it a little bit more complex and a little bit more complicated. This flag's getting a bit longer than I really would have liked, but I'm looking for that $250 breakout still. AM just popped up. DAS and Interact, I use DAS with interactive brokers, Alistair. So DAS Trader is the platform. It's the equivalent of IWS with interactive brokers. So interactive brokers has their own trading platform, which is the Trader Workstation, TWS. But you can also use DAS Trader with interactive brokers, and that's what I do. If I'm trading with interactive brokers, I'll trade with DAS Trader because I prefer the DAS Trader as a platform than the interactive TWS. That's not to say TWS isn't a bad platform. Well, not to say it is a bad platform. It's not bad. It has a lot of you can set hotkeys and things with it. It's not as intuitive as DAS Trader, I don't feel, and it's not direct access in the same way as DAS Trader is either. Yeah, I can see that. Went up to 1625, which is what I said it would pretty much. It's pretty much adhering. So if I right, you can't see the lines I've drawn on the old tickety tockety. So if you look at it's pretty much adhered. So this is technical analysis in action. So I'll just pull this chart across so you can see it on TikTok as well. So I drew this earlier. This line here, these purple lines, I drew this for SHC earlier, and the parallel lines. This is the range. It's an upwards range, but I drew that earlier, so I missed the breakout obviously because I'm trading one at a time, one stock at a time. And at the moment, I'm trading in Bed Bath & Beyond, so I might miss that breakout, but I'll be watching. I'm watching that range. But thanks for that, Penn State. I don't look at it. I don't. When I'm picking stocks, it's not Willy Wonka. It's not so much what's got earnings or whatever. I go to Benzinga and I look and I set my scanners up and I look for what's got momentum. Earnings isn't really something I look to trade. That can be one of the reasons. If it's got earnings and that's a reason why it has momentum, then that's just a catalyst that I might look for. So now, what was a bullish flag on the 2-minute, and we got a little bit of a breakout on the 2-minute, is now turned into a 5-minute bullish flag on the 5-minute. on Bed Bath & Beyond. So yeah, I consult Benzinga before I start trading. I set up my scanners, look at what's gapping up, look at the volume, look at the catalyst, look at the float size. I look at some of the fundamentals, but then I'll start looking at the technicals. And I look for momentum stocks that are moving up, following a trend with a catalyst. And that's what I do with Benzinga before I start trading every single day. This needs to get back over 215, but it's not doing. So nice little flag setup on SHC. High was 1638. Was the high from yesterday's after hours session. Should move that up to there. So that's the out of hours session high. No, actually, you're wrong there, Willy Wonka. That's exactly what I'm looking at right now. It's screeners. If you're looking at free screeners, they'll only give you market data. They won't show you pre-market data or anything like that, which is why you really have to be paying for your screeners, and you get real time. They're either going to give you delayed data or they're not going to give you any data until the market opens. So free screeners are okay. They're not too bad, but you're going to miss the open. Because of either delayed data or pre-market moves. So, yeah, I do look at screeners, and that's what what you've got, what you can see there on the left-hand side of the screen. I get those. That's for the regular session, but I also have them open for I'll show you in a moment. Stick around. And when I get out of this trade, I'll show you my Benzinga setup and how I go about it every day. And I'll give you a tour around my Benzinga. So we're a penny down on the ask. Ready for get a bit of a flat top breakout here. I want to see this break of 1640. That's the 1638 from yesterday evening. 1640. That's the 10 cents I normally take, so take that off. I'll put a 10-cent trail in place right now. Okay, so I've got a 10-cent trailing stop on for 2,500 shares there. That's fine. I'm good to go there. It looks like it might stop me out, but either which way. So what I'll do is I'll show you my my Benzinga. I'll give you a tour of my Benzinga now, and what I'll do is I'll do that for everybody. So laptop here we go. So this is what I'm looking at on a daily basis. What you see here, this is my screeners. So normally you want to see these two scanners, okay? Now I've got this set up so I see this first thing in the morning, and I've got my gap scanner here, which tells me what's moving, what the price is, how much it's moving by, what volume it's moving on, the company name, what the average volume is as well over the last 3 months. So I can quickly see what the relative volume is. Right now, for example, Sotera Health, we're close to 13.5 million there. So we're close to 7x relative volume, okay? This is my momentum scanner here. So this tells me what's moving over the last 15 minutes and by how much and the volume and everything else. I've got my real-time scanners here. Now I've got these filtered by price and everything else and volume, and so there's a lot of crap that just a lot of noise that I just get filtered out using my filters here. This is my real-time scanner here. So this gets updated in real time. So I get to see, like Sidu here is the top mover over the last 15 minutes. I can look for over 5 minutes, over 30 minutes, over an hour, or I can look over the session. Here I've got my signals, which is based on price spikes. It's based on volatility halts. It's based on series highs. Then I've got my rolling news, and this is what my Benzinga is set up to look like every single day. This is what I do. This is where I get my ideas from. And just bear with me one moment whilst I get the break of 1650. I want to be in it. No, I don't. Reversal indicators. They're devil horns. So I'll come back to that in a moment. But this is what my Benzinga. So I use these scanners. This is Benzinga. On the back of that, I'll just look at. So I pop these out so that you can see them. These are the same scanners, but these are for pre-market. These two are the same scanners I've just shown you, but I pop these out so I can actually show them on the stream. Here I've got calendars. I can open up a calendar, for example, with Benzinga. And what it looks like when I open it up, it automatically, I've got it by default, it automatically will go to the earnings. So I can straight away see what earnings there are today. Now I can look at earnings on any particular day, looking at the date range here. So I can see Cinex, Bed Bath & Beyond, TSRI, Innovative. This is it's not a huge earnings day today, but I can also look at other things on the calendar. Analyst ratings due out, dividends, FDA meetings or whatever, IPOs, SEC filings, or anything like that. I can look at this based on the calendar of what it is. So that's what I can look for when I'm looking for stocks to trade. Details allows you to do news, watch list. You can build your own watch list. There's all kinds of things here. Insider information. So that tells you who's actually buying from within the company, etc., etc. So all of this is what you can get. You can there's even a Squawk functionality as well, that you can open audio Squawk news, so you can actually listen to the guys at Benzinga talking about the trades, talking about what's moving if you want to do that as well. The news is great because you get that in real time. It comes out in real time. So that's Benzinga. So I mean, this is my link tree. If you want, so these links are all in the description on YouTube. And if you want to get to this directly on TikTok, just go into my profile. There's a link there. It says Linktree, the TikTok trader, which is, as you can see. And just bear with me 1 second. So Linktree, the TikTok trader. You can buy some Day Trade with Tony merchandise by all means, if you want to. And you can use this discount code for your Benzinga trades. If you want to get into Benzinga, you want to buy Benzinga, you try it free for 14 days, first and foremost. Try it for free for 14 days. Then use this code. You get 35% off. Whatever you get, automatically get a discount based on the length of term. So if you go for a quarterly or annually, you get a lower price, but you get an additional 35% off if you use my code, which is DTWT35. That's for Benzinga. Now, of course, if you want to learn how to trade, come and join us on the Day Trade with Tony community. And happy to teach you, mentor you. You get access to my private Discord, where we have a number of traders there that are calling out what they're trading, why they're trading it. Bit like Benzinga, but it's a more personal things. This is the syllabus. If you want to come and join the Day Trade with Tony community, learn how to trade the way I trade, the strategies that I use, the patterns that I look for, etc., etc. It's more than a thought. I'm virtually giving it away. You've got a whole ebook library that's included in that, using the books that I use to taught myself to trade with. You've got a swing trading course here. And it's 120 bucks plus tax wherever you are, whatever the regional tax is in your geographic location. Yeah, check that out. That's in the links in the description on YouTube or in my link tree. TraderView journaling is what I use to journal. This is my journal for on TraderView. You can see here, based on 2022. Last year, you can see this is how I traded last year. It got all of my analytics and the likes here. I've got my detailed from 2022. You can see 1.26 million was my gross number from last year. And I've managed to get over 1.01 million was my net number last year. So I did $1 million last year in trading profits, and I'm looking to do more than that this year. I'm looking to do 1.2 this year. So we'll see how we get on. Hopefully we'll be able to do that. And hopefully, if we can do that, great. I'll have another good year. So that's if I look to 2023, we'll filter that. We can see that in 2023, I've made $16,000. So in January, year to date, I've made 16,000 in profits. So how's that look? If I look at the calendar, you can check that out for yourself. So I've not had a red day yet. Today's looking like my first red day of the year, but we'll see. I'm currently in a trade right now with SHC as it's approaching 17 bucks. But I've been averaging. Let's have a look at how much what I'm averaging. So I've got 5-6k the first couple of days, then a couple of 2k days. So I'll go back to the reports. And my average this month so far is just over 4k. So I averaged over 5k a month last year. I'm just over 4k at the moment. So that's where we are right now. So let's go back to the actual stream and the trades, and I will get out if break even. So I've just got in a trade there as we broke the $0.50. Managed to get a little bit back. So we're under 8k down at the moment. So we're having a red day at the moment, but that's not to say that's going to, well, in fact, I know that's going to change. So there's enough volatility in the market. But what I will say is that that's the end of the stream. So I'm going to carry on trading. I've got to recover that 8k. I've got to dug myself a hole today, so I've got to recover that 8k. I'm going to carry on trading. The dog's asleep. It's raining like you wouldn't believe outside, so I'm not going outside in the rain with the dog. So I will continue trading here, but I'll end the stream. I will do a trade recap on YouTube later. So if you want to see how I finished, jump on the watch out for that. Jump on the YouTube, subscribe to the channel, you get notified. And if you're not that bothered and you just want to learn and come back tomorrow, which broke $17 on SHC, then come back tomorrow, and I'll be doing it again from 2 hours before the market open. Well, 90 minutes before the market opens. So 1 p.m. my time, that's same in the UK. It's going to be 8 a.m. market time, East Coast, and I'm trading live every single day from that time. I won't be doing a power hour stream tonight. I'm still a little bit jet lagged from my vacation. So yeah, come back tomorrow and we'll do it all again. And I hope to see you there. Take care, guys. Where is